Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of Wall Street. Today we're diving into Bon Natural Life, a company with a name that sounds like a health guru's catchphrase. But their latest filing, let's just say it's a bit more complicated than a simple eat your greens. Get ready because this report has got more layers than an ogre or an onion. So what's the story? Bon Natural Life just filed an amendment basically saying, hold up, we're not quite ready yet to their previous registration statement. They're aiming to sell more shares to the public, but there's a catch. They're offering these shares in units, meaning you get a share plus these things called warrants. Who is Bon Natural Life anyway? Well, they're a Cayman Islands company, but all their actual business happens in mainland China. They make ingredients for things like perfumes, health supplements, and even some bioactive stuff for food. Think natural extracts and plant compounds. They're selling up to 5 million of these units. Each unit has a Class A ordinary share, that's just a fancy word for regular stock, plus 2 different kinds of warrants. Warrants are like coupons that let you buy more shares later at a set price. One of those warrants might even get cheaper down the line if the stock doesn't perform too well initially. It's a bet on the stock going up, basically. Now here's a twist. They're also offering something called pre-funded units. These are for people who might end up owning too much of the company if they bought regular shares. It's like saying, hey, if you're going to become a major shareholder, we have a special deal for you. These pre-funded units come with a pre-funded warrant which you can use to buy a share for just a tiny bit of money, like practically free. The company is an emerging growth company, meaning they get to skip some of the usual reporting rules for public companies. It's like getting training wheels for your first few years on the stock market. This is what they are selling: ordinary units, a share plus a Series A warrant and a Series B warrant. You can buy a unit, then the pieces separate and trade on their own. They are also offering pre-funded units, which are a replacement for a share plus a Series A warrant and a Series B warrant. The share is replaced because certain buyers aren't allowed to own too much stock. The scroll. Prior to the effective date of the registration statement, of which this prospectus forms a part, and following the receipt of all required regulatory approvals, the company will the scroll. Here is where it gets a little complex but important. The company is doing a dual-class restructuring, which involves exchanging shares from the CEO and his wife for a new class of shares that have super voting powers. Basically, the CEO wants to ensure he has a ton of control, almost 100%. The scroll. The number of units offered in this prospectus and all other applicable information has been determined based on an assumed public offering price of $2 per unit. The scroll. The offering amount and all the price figures are based on bonds shares being worth about $2 a unit. That's subject to change depending on the market. Here's a big risk. There's a law in the US called the Holding Foreign Companies Accountable Act. It basically says if the US can't check the books of a company's auditor for a few years in a row, usually because they're in China, then that company's stock could get kicked off the stock exchange. This scroll pursuant to Rule 415 under the Securities Act of 1933. Check the following box, 1.6, scroll. They're planning to keep selling shares over time, not just in one big chunk. It's like saying, we're going to be around for a while and we'll keep offering opportunities to invest. Scroll, we are exposed to legal and operations risks associated with having substantially all of our operations in China. This scroll. Here are some big risks you should keep in mind if you're thinking about buying their stock. They're based in China, and the Chinese government could change the rules at any time. There are rules around the auditors used by Chinese companies listed in the US, and if the auditor isn't up to snuff, they could be delisted. There's scroll cash flows within our organization. There's scroll. Money is flowing mostly from the main company, Bon Natural Life, to their entities in China through a company in Hong Kong. If you are a shareholder, this money goes from China to Hong Kong to Bon Natural Life and then to the shareholders. There's scroll. We believe that we have obtained all material licenses and permits from the PRC government authorities for our business operations in the PRC. They think they have all the right paperwork from the Chinese government, but they can't be 100% certain about future changes to those paperwork requirements. There's scroll. Our failure to appropriately respond to changing consumer preferences and demand for new products or product enhancements could significantly harm our customer relationships and product sales and harm our financial condition and operating results. Their scroll, consumer trends change quickly and the company has to be able to keep up with changing consumer trends. Their scroll, we may face increased competition from new and existing firms with greater capital resources, which could cause our market share and profitability to decline if we do not successfully meet competitive challenges. Their scroll, bigger companies with deeper pockets could move into their market and try to steal their customers. Their scroll, the inability to obtain adequate supplies of raw materials for products at favorable prices or at all could have a material adverse effect on our business financial condition or results of operations. Their scroll, getting the ingredients they need to make their products could become difficult or expensive. Their scroll, our products have not been clinically proven to be safe or effective, and our quality control efforts are limited to ensuring ingredient and product purity and certain safety measures. If our products or similar products distributed by other companies were proven or asserted to be unsafe or ineffective, our business would be harmed. Their scroll, their products haven't been tested to see if they actually work or are safe, and that could cause problems later. Their scroll, because we do not expect to pay dividends in the foreseeable future. You must rely on price appreciation of our Class A ordinary shares for return on your investment. Their scroll, they're not planning to pay dividends anytime soon, so investors are banking on the stock price going up. Their scroll, our dual-class structure has the effect of concentrating voting control with Yongwei Hu, our Chief Executive Officer. Their scroll, the CEO will have almost all of the voting power. The CEO basically gets to call all the shots, even if other shareholders disagree. Their scroll, if we fail to establish and maintain proper internal financial reporting controls, our ability to produce accurate financial statements or comply with applicable regulations could be impaired. Their scroll, they've had problems with their internal accounting in the past, and if they don't fix those, it could lead to inaccurate financial reports. Their scroll, although the audit reports included in this prospectus was issued by US auditors who are currently inspected by the PCAOB. If it is later determined that the PCAOB is unable to inspect or investigate our auditor completely, investors would be deprived of the benefits of such inspection, and our Class A ordinary shares may be delisted or prohibited from trading. Their scroll, there is a risk to be delisted because of rules around their auditors. A new Chinese investment law could change how they do business. Do scroll, any disruption of our factories or our suppliers' factories could materially and adversely affect our business and results of operations. B, scroll, anything that shuts down their factories like a natural disaster could hurt their business. D, scroll, 2025 Extraordinary General Meeting. D, scroll, shareholders have voted in favor of the CEO, Mr. Horn, maintaining virtually all the control of the company's voting rights through a special class of stock. D-scroll, management's discussion and analysis of financial condition and results of operations. D-scroll. Let's look at how the company actually performed. Their revenue decreased almost 20% from fiscal year 2023 to fiscal year 2024. To address their money problems, they've taken to issuing shares to private investors. The company continues to make a series of maneuvers, including selling off one company, taking over another company, issuing shares, and entering into agreements to sell more shares in the future. This indicates high uncertainty around their future. Scroll, the trading price for our Class A ordinary shares may fluctuate significantly, which could result in substantial losses to investors. The scroll, the stock is highly volatile and the price could change wildly. So, what's my take? The company has had a rough year, sales are down, and they appear to be highly reliant on financial instruments to stay afloat. While their products sound good in theory and all natural, consumer trends change rapidly. The market is highly competitive. For these reasons, this is, in my opinion, a weak company that I don't have a high degree of confidence in. Their stock trades around $1.50, and I wouldn't expect it to go much higher in the near future given these problems. I am slightly bearish and would expect its stock to trade somewhere in the range of $1 to $2. Be careful with this stock. If you enjoyed this, please like and subscribe to this channel for more in-depth reporting.